Welcome. My name is Candace Morris, and I am the Director of Membership with AIME, and I'm joined by a few fellow Texans, so I wanted to include you in some Texas terms. When I say y'all, this is y'all. When I say all y'all, it's all y'all. So, welcome. I'm so glad that you're here. We're going to be talking today about young disruptors. I am joined by some incredible people up here. They have incredible information for you, and I have the best role today that I get to talk about it. We're just gonna have a conversation. So you're not eavesdropping, I promise. Pull your chair in closer, listen in. My goal for this is to have that conversation that if we were all at coffee right now, or somewhere else other than coffee, we would be looking into each other's eyes and asking these real questions. You know, how did you get where you are? How do you stay there? And what lessons have you learned along the way? And to leave this session with really good information and ways that you can implement it into your own business. So welcome everyone. Thanks for joining me this morning. Glad to have you.
Excited.
You have some pretty cool stats on the side of the screen, so it's gonna be great. Okay, so Tyler, we are actually gonna start with you. So we're all young disruptors, we're all newer into the industry. What brought you into the mortgage space to begin with?
So my background was in accounting. I went to college for accounting, and I was actually trying to purchased my first house using my VA loan and met with a small broker, and she actually couldn't qualify me because I was working part-time, had a GI Bill income, but she offered me a job instead.
Oh.
So I went for a loan and ended up getting a job, worked that accounting job for a little while, and then she encouraged me to get my license, and I didn't picture myself as a salesperson, but ended up getting my license, and now I'm a salesperson.
Okay.
But it's been great, and shortly after that, I started my own brokerage, and I love it.
Welcome, glad to have you.
Thank you.
Amir, what about you? What brought you into the mortgage space?
Yeah, so thank you for asking. So when I was about 23 years old, I was working at a credit union doing like financial advising, helping people, working under a financial advisor, helping people like invest their money or whatever it was they were doing. Then I got a job at UWM. UWM was hiring. I was an account executive over there for about a year. While I was at UWM, I met some wonderful brokers. You know, they were my accounts. They were phenomenal. And then, as you guys all probably know, working under Matt Ishbia is one of the most motivational things in the world. So I had a meeting with him one day, and I said, yo, Matt, I'm going to quit. I'm going to open up my own brokerage. And he said, all the reins to you. God bless you. And I bounced, and I started my own company. And that was really it. And now we've taken off from there, you know?
Amazing, amazing. So when you're young and in the industry, in any industry, people tell you kind of start small. You know, take on what you can chew. Don't go beyond that. And I know you specifically have gone in the other direction and said, I'm really good at this and I'm gonna keep going, and you've just grown and grown and grown. So can you tell us about the companies that you currently have and just where that kind of inspiration came from?
Correct, yeah, so, great question. So I'm very privileged to be able to say, so just about a month ago, I just hit #1 loan officer in the whole state of Michigan. So we're doing incredible, we're doing really, really well. Just myself, we're going to close about maybe 800 units this year, just on my own. And it all started from just one little thing, and that's put the consumer first.
Always.
You know, you hear a lot of people talk about it in regards to, it's a cliche statement, put the consumer first, you're going to win, whatever it is. But if you put the consumer first, if you don't chase the money, rather chase the success, or you chase the benefit of the consumer, you're always going to win. So I started the brokerage about 3 years ago. I was on my own for 2 years. I didn't have a single person. I had one other gentleman on my team, and I wanted to build a foundation. I didn't close a loan my first 6 months in the industry because I was focused on strictly building a foundation. Because I knew that if I was getting 1 deal here, 2 deals here, then I wouldn't be focused on getting 10 deals there or 20 deals over there, strictly because I have one deal I started getting comfortable. So I focused strictly on building a foundation my first 6 to 8 months. Then upon doing that, just about 3-4 months ago, we started hiring on more people. We hired on about 20 loan officers now, so the team's going incredible. And then what we noticed is a lot of brokers were reaching out to me and, hey, Amir, so what's your process like? How are you doing this? How are you doing that? And I was totally honored to do it. And me and a partner of mine, we started a processing company. So he was a processor himself, so we started a processing company. So now the processing company is incredible because we have a lot of brokers that are utilizing the process that we're using here in Michigan for their own business, and then they're elevating, and now they're hiring more loan officers, and they're growing as well. So it's strictly me just being just a senior loan officer at my company and then opening up the processing company.
Absolutely. Well, and I think being on the younger side, we have the benefit of looking at the people who've gone before us, and if we're wise about it, not just smart about it, we learn from those mistakes, and we learn how to pivot and be nimble and flexible. And so, Angela, I know as things have moved, especially in the past year and a half, that you have a really particular process and a way to keep the consumer first, even as we steer toward more tech, which we'll talk about later. But through kind of that underwriting process or through really the entirety of the loan, how are you keeping your consumer first, be them older, younger, with you as a younger loan officer? How does that work for you?
Yeah, my goal is to really streamline the process and make it as easy as possible for the client. So I like to write what I call underwriter love letters. On all my files that I submit, I write a letter basically structuring and explaining how I put the loan together. So when it gets to the underwriter, they're not kind of putting those puzzle pieces together possibly in the wrong way. And it makes the process a lot more efficient. They get back to me immediately and they really don't have any questions.
Right, right. And you as a loan originator, you know your client best. And I think writing that love letter, as it were,
Yeah.
you're able to be their best advocate when you provide the quality of that information, the quality of their loan, and you get to go first and say, hey, on behalf of this person, I'm going to give you all the best information. And I think that's an incredible, incredible process. So Thank you. Consumers first, that's what we're going to talk about and continue to talk about today. So Jeremy, hard pivot. The past 18 months have been pretty different for a lot of people in this room, but not as different for you, because being remote and traveling across the world has been part of your story for a really long time. So how has that impacted your team in being remote and still able to maintain these relationships with your borrowers?
Sure. If I just may survey the room, how many people here worked remote before the last 18 months, pre-COVID? Okay, it's hard to see many hands, but now post-COVID, how many people work remote? All right, I saw some more hands kind of fly up. What COVID did was just allowed people to work remote, and what we were doing before didn't necessarily change anything. The ability to understand that when your phone rings, you pick it up, understand that there are nights where you work till 2, 3 in the morning, you're not working the standard 9 to 5, the in the office mentality versus the working remote mentality, it's different. And a lot of people realize that working from home with COVID. And did I answer your question?
Absolutely.
Yeah,
Keep going. This is great.
It's understanding that, when your phone rings and it's Friday at 9 o'clock at night, do you pick it up or do you go, I'll deal with it on Monday or I'll deal with it tomorrow? Pick up your phone. And when you do that and when you travel, you can be walking in the streets of Colombia and your phone rings, pick it up. Now, don't do anything stupid where you're taking an application in a coffee shop in Colombia and there's people around you. When you have your laptop open and you're typing in their social, don't do that. That's stupid. But being able to not limit your workspace to an office of 4 walls. Does that make sense? Being in constant communication with your team. My team can text me or call me at any time. Weekends, it doesn't matter. Reach out to me, I'll respond back. And if I don't respond right away, I respond back.
Absolutely. Clear is kind, and the clearer you can be with your team, with your borrowers, I think the better experience it is for everybody. And Tyler, I know for you, you use a lot of technology as you interact with your clients. So can you tell us what you're using, how it's working for you, and really what the benefit of that has been?
Yeah, I mean, one of the big differentiators in my business in the last 2 years has been using BombBomb, so using video emails. Obviously, we're not meeting clients face-to-face as much because we're in Columbia coffee shops, traveling, and so being able to give that personal connection through a video instead of just a phone call or an email has really helped elevate that client experience as well and build that trust and relationship that's hard to build through an online transaction. And using other software, obviously Arrive as a LOS, and so just being on the forefront of the technology, I think is very important as a broker. As Katie mentioned earlier, like we've got to compete with these large organizations, big tech budgets. So one thing that AIME's helped us out with is being able to help us provide those resources.
Absolutely. And I think being flexible in your technology options to see what works, give it a try. The best technology is the one that you're using at the time. Use it, utilize it, because it's going to be the best option for your consumers. So changing gears real fast to social media and growing that client base, because you need to grow it to then serve them, and it's all kind of in this cycle. Angela, how have you both grown and maintained such a wide client base?
Yeah, so I started out and I really didn't have a marketing budget, and I know you hear everybody talk about establishing your brand and how you pay for all these marketing ideas, and I didn't have the money to do that. So, and I'm not advised or advocating for this, but when I started out, I was going to the bar all the time with my friends. I was in my 20s, and I would take their cell phones and invite everybody to like my Facebook page on their friends list. So that really grew my business organically. It didn't cost me any money. I might have had to buy them a drink or two when they realized that I was inviting all thousands of friends to like my page. But I have done loans for their parents, their cousins, their coworkers, and that kind of really set me up. And now I think I have over 4,400 people following my Facebook page.
Oh my goodness, that's amazing.
Yeah.
Amazing, amazing. So obviously technology is continuing to be part of the conversation as we grow, as we want this American dream for more people, we need to scale it. But a big portion of that is keeping our borrowers safe. And so, Jeremy, I'm going to throw it back to you for information around how you have implemented safety around technology.
Sure. I mean, one of the first things I did when I set up brokerage was I worked with an IT company. All of our laptops are encrypted. So if you lose your laptop and it's not encrypted, your client's data could be in jeopardy. So we focus on, if something were to happen, there is a process in place to help resolve any potential issues that can come up, or we want to minimize it, right? Any company out there can be necessarily a target, but if you can minimize the chances of something happening, do it. Like it's very simple. If you go to Starbucks, don't use the public Wi-Fi. We have a Verizon jetpack that we carry everywhere, and if we need Wi-Fi, we turn it on. It could be on the side of the road where you need to send out a letter. Stop your car, turn on your jetpack, open up your laptop, draft your letter, close it up, and keep going. Does that make sense?
Absolutely. Just out of curiosity, how much is it to get a hotspot on the go, just for people?
I think it's
is a new information.
I think it's like $70-80 a month.
$78, and that's the difference between.
It's the cost of doing business. Yep.
Yeah. Okay. A safe borrower, a safe transaction, and not so much. So.
Right.
If you are at Starbucks, I would love to meet with you, but we're not getting on public Wi-Fi together. Draw the line there. Okay, Amir. Obviously young, you've had incredible success lately. What would you say a misconception would be around young brokers?
So it's a misconception around young brokers. So to be very transparent, there's a lot of young brokers that are getting into the industry, maybe not a lot, but a good amount, that are getting into the industry strictly for the money. That's just all it is. There's a lot of these guys that are just, they're coming on, they don't know much about loans, they don't know much about what's going on, but they're strictly just coming on because they know how much money they can make in this industry. So what that does is, unfortunately, that puts a bad name on all of us here, right? Because we're invested in our consumer, we're invested in the growth of the brand, we're invested in the growth of AIME. A lot of these people that come on, or a good amount of these people that come on, they're strictly coming on for the money, right? They're only chasing the money, they care about nothing more but the money. A misconception around young loan officers is, yeah, I'm gonna use somebody older, right? Or I'm gonna use somebody that has been doing it for 35 years. But hey, that person that's been doing it 35 years only knows about a 30-year fixed or a 7-year ARM, right? They don't know about the high balance nationwide or the other programs that these lenders are offering. And that's a big misconception, that the younger brokers or the younger loan officers don't know as much about the industry as a lot of the older brokers, right? And once again, there's probably older brokers that know a lot more than I do, which for sure there is. But that is what I believe is a misconception, is strictly our knowledge and how much we know.
What about you, Tyler? What misconceptions do you think are out there?
Yeah, so kind of like Amir said about just knowledge or experience, and I don't think you have to be 10 years, 20 years experience to be a good mortgage broker or a good loan officer. And so really it's about knowing how to find answers, where to find answers, using your resources. So in our company, I always try to teach our new team members, it's not about memorizing every guideline, knowing every rule. There's just too many of them, and they're always changing. So how do we train how to learn? So not just train you on the material, but how can you find answers, and how can you make yourself that expert in time through repetitions and practice. So I think the misconception is, just the experience level and the expertise of a young mortgage loan officer.
Sure. So to the guideline conversation, Jeremy, I know you have a really cool process as it comes to guideline and some helpful tips for how to make sure you're up and up on guidelines. Can you share that with our group?
Yeah, I mean, guidelines are public. I mean, any consumer can go and Google what the guidelines are. As a loan officer, I don't feel that a underwriter should tell me how the deal should work. The underwriter shouldn't tell me what documentation's needed. I should already know that ahead of time. And if a lender has an overlay, that's one thing, but what's the actual rule? And you can go to Fannie Mae guidelines or Fannie Mae, get a full PDF, which is 1,000+ pages, Control F. And if you Control F what you're looking for, you'll find your answer. And then from there, that's the basis of how you put together your file. I mean, that's why we don't have denied loans, because we know the guidelines ahead of time, so we structure our deals accordingly.
That's Control F again. Or write a love letter to your underwriter. I mean, these are both great tips.
I mean, there's a lot of companies too where you can even send your guideline question to them, and in 24 to 48 hours, you have an answer. You can do that with 2, 3, 4 different companies if you have something in a gray area. And then if one person says yes, you have a deal that's doable, versus if you're in, let's just say, a retail outlet, if your loan's denied, you're stuck. It's going to your competition, and your competition's closing it. At least if a loan doesn't fit a certain scenario, we have the ability to pivot and go to XYZ lender.
Control F one more time. Works on every computer, Apple or, I was gonna say Apple or Mac, goodness, Apple or Windows. Good luck. Okay, Angela, working remote has also been part of your life lately. What advice would you have for really just the day-to-day, not so much the mortgage broker side of things, but just the environment of working home alone sometimes and still keeping up on your social skills with your clients, but being far away, working near a window. What advice would you have for those of us working from home, me included? And Angela and I are both in Dallas, so sometimes we wave to each other at the same time. Hope she sees me.
Oh, I see you. I mean, so being from Delaware and the market there is so different. I am still friends with people that I went to preschool with. We're not a big town. We're super tiny. So it's nice. I have the relationships with the realtors that I work with. I'm friends with them. When it comes to working remotely now in Dallas, I just make sure that I am still keeping up with them on social media, because the last thing I want to do is leave Delaware and then my whole referral base just falls off the face of the planet because they don't see me anymore in person. It was already hard with COVID starting and no one being out and being social and doing things, and now with I'm 1,000 miles away, I just check in with them a couple times a week.
I love it. I like seeing your pictures too. Amir, how do we go about right now? I know you're growing so many businesses. How do we go about attracting young talent into the mortgage industry?
So somebody on my team always talks about, Amir, the only reason why I joined your team is because you have receipts, right? You have something to prove that what you're doing is working. Truthfully, I personally, and this is just me speaking on behalf of what I would do, I would never join a brokerage or I would never join a company if I'm producing more than the broker. Like I just can't, and the reason why I can't, mind you, I did though when I first started because I had no other option, but I just can't, right? Because it's like, I need somebody to look up to. I need a mentor. I need someone that's gonna say, or that's gonna hold me accountable, or someone that's gonna put me in my place, or someone that's gonna put me in check. Hiring young talent is great because you wanna find young hustlers. You wanna find people they're in it to win. Like, you have to win. You have to compete to win every single time. And just attracting these young hustlers, if they see what you're doing, or if they see what the broker's doing, or another loan officer on their team is doing, or the team leader's doing, they're gonna be attracted to that. It's just gonna happen, because they're gonna wanna be like that leader, right? But then also there's a lot of people that have been on my team where they're not all in. They're not interested in coming in at 9 o'clock in the morning, or they're not interested in staying till 5 o'clock at night, or they're not interested in coming in on a Saturday for a purchase workshop. I give them the conversation where, hey, unfortunately, there's no room for you on my team. It's because if you're not all in, or if you're not willing to compete, or if you're not willing to chase a success, there's no room for you. So a lot of people that are interested in those three things, that's how we attract them, and that's how we get them on board. We just show them this is what we're all about, and we're just going to lay it all on the floor.
Absolutely, and it's such an equation. You can attract, but then also what are you doing to maintain and to keep talent in home base. And so Tyler, I know for you, culture is a really big part of NXT Mortgage. So can you share with the room what has worked well over the past few months and years as your team continues to expand, and really the emphasis that you put on at the very beginning onto culture and why it's so important?
Yeah, I mean, to us, culture has always been the forefront of our entire business, our entire operation. We have a company motto, progress over profits, and we go into every day and every transaction with that in mind. It's not about just making that extra dollar. It's about helping other people, helping people on our team. And so, you know, I've just always had this heart to care for other people, and a lot of times I put other people before me.
Yeah.
And at the end of the day, I'm like, oh, I didn't do anything today except help everyone else's problems, and now I have to do my work too. But I enjoy that, and I've always had that desire to do that. And so if you're gonna grow a team, like not everyone in this room is gonna grow a team or built to grow a team or has that desire. But if you are, you've really got to put those other people who trust in you you got to put them ahead of you. So the very first employee we hired, like that's when it kind of sunk into me, like, wow, this person's paycheck, their livelihood is dependent on me. Even though they're a loan officer generating their own business, it's like they were still trusting in me to do the right thing and to show up every day and to be there to support them. So all that to say, I mean, culture is very important. Some things we do, like I just try to find little ways to show people that I care, whether it's a small thank you card or a thoughtful gift, or just sending a text or a video telling them I'm thinking about them because they did something cool and showing a lot of recognition. At the end of the day, our jobs are very hard and stressful, and so it's important to show that recognition and let people know that you appreciate what they're doing is actually hard work. And a lot of times that goes unnoticed because we're just so busy in our day-to-day that we don't take a second to stop and tell someone thank you.
And I know you all are in the office together. Y'all, excuse me. All y'all are in the office.
All
together.
y'all.
All y'all. But Jeremy, I know you're on the road a lot. So how do you maintain that culture, that positivity, the putting others first, both in clients and in your LOs while you're out traveling?
Well, I mean, I'm available. So if someone needs me, they know they can call, text, or email, and I'm there. I actually go into the office Tuesday to Thursday, and Friday to Monday I work from home. And if my team needs me to come in for any reason, I come in, but I'm there. We have a pipeline call during the week, so we kind of go through the loans that we have, and my team doesn't want me on pipeline calls anymore because they want to handle it and take over so I can focus on other things. But it's cool having someone tell me, hey, we don't want you here, go do something else. It's a good feeling to have. Does that answer your question?
Absolutely.
Perfect.
I love it. We're just glad y'all are here having the conversation. Okay, Amir, back to you. What do you wish fellow broker owners across the country knew about other young disruptors? This room is filled with other young people that are new to the industry. They're learning, they're taking matters into their own hands. But what is one thing that you wish you knew that their bosses would know about being young?
So something I wish I would have known being young, entering into the industry, when I first started is it's all about the process. It's all about the process. You know, I give my team this little explanation. It's like the restaurant story, right? Where like you walk into a restaurant and you're having the best experience ever. You know, the waitress, she serves you, she sits you at your table, you and a couple guests, and they give you the drinks and they give you the napkins and then you get the order and you get your food and everything's going phenomenal. But after you're done eating the food, right? It's like 45 minutes later, your cups are empty, there's no food. It's like, and you're like waiting for the bill, right? You can't find your waitress. Hey, you know, you find another waitress. Hey, I can't find my waitress, we're trying to leave, right? 15 minutes later, the waitress comes and they give you the bill, and you know, the ending of the process was horrible, but the beginning was incredible. You know, people usually leave that restaurant and they say, man, that was the worst service I've ever had. But it's like they forgot about everything that happened initially. They forgot about that 4-day clear to close, right? Or they forgot that, hey, they worked with a listing agent to get your offer accepted. They forgot about all of that because the closing process wasn't the best. So as a young disruptor, something that I wish I would have known be early on or right in the beginning of when I started was the closing process of any mortgage company is the most important. It is vital. Because that 3-day CTC, nobody cares about it if that closing disclosure at the closing table is completely wrong, right? They don't care about that 3-day CTC because like we're trying to close now, you know. So that's something I want everybody to know, and I wish I would have known when I first would have entered the industry as a young disruptor.
Absolutely. So while we're here, we have both, exhibit halls going with a lot of different partners and sponsors and tools to use. So for each of you, Jeremy, we'll start with you at the end. What tools have you used just in your business that you would recommend this entire room go check out and potentially implement into their own?
Oh, yikes. I mean, we use Microsoft Teams. It comes with your computer. We all hop on. We can do video. We can do pipeline calls. Anyone could be anywhere and put on my AirPods and listen to the call.
Yeah.
I wasn't prepared for the tech piece of it.
No worries. We can just do a snake draft and come all the way down.
Yeah, maybe after they go through, I can chime in.
Amir, what about you? What tool do you think has just changed your business from the inside out?
For sure, it's Arrive. Shout out to the Arrive team. They're the best LOS, hands down. No one will ever touch them. Arrive all day. Arrive, MMI. MMI is huge because if I'm competing to earn a realtor's business, you just go on the website, you put in the realtor's last name, and you see every lender that they're using. You take that information, and then you can combat what that other lender is not doing well. And then another thing is Remind. Remind is huge as well. Remind's a big deal because Remind, you can just search up the property address, and you can see what lender they're currently with. You can see how long they've had their loan for. You can even see their interest rate that they currently have.
Right.
It's incredible. So when trying to earn that debt consolidation business or that refi business, you go on Remind, it's game over. Yeah.
Love it.
I use that too. Great
Game
tool.
over.
You can't steal answers, Jeremy. No stealing. No cheating. All right, Angela, what about you?
Yeah, there's two main things that I really use. HomeBot, which they're here. It's a set it and forget it type thing that just brings you business every month. So I love that tool specifically, but also Active Campaign. I'm big on email marketing, so I do a monthly email blast, goes to my entire database. It'll have topics like shopping for new insurance. It'll have topics about refinancing to get rid of MI. When the changes went through for FHA student loan calculations, I sent out email blasts from that. Active Campaign is like MailChimp on steroids, if anybody uses that platform. It's really awesome. I love it, and I have great results.
I love it. Okay, Tyler, what about you? What tool?
Amir took mine. Arrive for sure. MMI as well. I use MMI a lot. And then, as I mentioned earlier, like BombBomb or Loom, any video services. I'm not sure if either of those are bad partners, but yeah.
Okay, so to round us home, we get a few more minutes left with this room of all of our new friends. What piece of advice would you give to these processors, loan originator assistants, broker owners, me on the AIME team? What advice would you have for keeping client first or something about your process, anything that you could impart wisdom over our not public Starbucks Wi-Fi?
Sure. I mean, I don't know if it's necessarily client-centric, but know what you're building, know why you're building it. There's a quote by Bob Dylan, a man is a success if he gets up in the morning and he goes to bed at night and he does what he wants to do during the day. So as you're building it, enjoy your life, know what you want to build and go build it, and have a work-life integration.
I love it. Amir, what about you?
For me, it's really just a couple things. The first thing is when I first started, it was probably my first 25 loans. I did them completely free. I didn't charge any comp, waived underwriting on every single loan. And I went back to that consumer and I told that consumer, hey, I just want to let you know, I have no book of business right now. I did your loan entirely for free. Mr. Client, you're an investment to me now. Mr. Client, I can hope that you would refer me 2, 3, 4 more people down the road. I hope you understand, you're one of my first few clients I've closed a loan for. Something that Matt Ishbia taught a lot of us as AEs when we were working at UWM was every client is worth $25,000. That is the cost of every single client. And the why behind that is you get the first client, you make your compensation off the first deal, then you get the brother, the sister, the friend, the mom, the dad, the cousin, or any referrals that come from it. Every time you get a phone call or every time my phone rings, I think that's a $25,000 phone call. It's like, I have to answer that phone, right? And then the last thing, I dislike, Rocket with all my life. I hate everything about them, but there's one thing that they taught, which I totally agree with, and they say, numbers and money follow, they don't lead, right? So if you're following, or if you're chasing the success, the numbers and the money are gonna follow. But if you're following the money, you're only gonna chase the money, you're always gonna do what's unethical, you're never gonna do what's right, and you're never gonna believe you're successful enough. So you have to chase the success always, rather than chasing numbers and money.
Okay, Angela?
Yeah, one piece of advice I would give to
Sure, yeah.
Thank you.
One piece of advice I would give to young loan officers just getting started, something that I knew from the very beginning was important, is to build your database. So everybody that I've ever spoken to in the past 5 years, I've written down their name, phone number, email address, and the way that I've talked to them or where they came from, whether it be Facebook or a realtor, and that kind of sets my book of business to, it kind of gave me back in tenfold, because people from 5 years ago who I wrote their name down, they still get my email blast, and so now that they're ready to buy a house or ready to refinance, they've reached out to me, so that's really paid off.
Amazing. Okay, Tyler, bring us home.
So I think the average age on the stage here is like 22. Is that what we calculated earlier?
27.
21.
Oh.
So I don't know if this is a piece of advice or not, but we're younger. We're young disruptors. We're disruptive. But I think there's people in this room who are older than us who can still be young disruptors. Like, young is a mindset, not an age. And so, I mean, I've got people who join my company who are older than me, old enough to be my mom or my dad, but they're young-spirited. They're young in this industry, and they're hungry and motivated. So stay young, even if you're old. And then I guess my other one is
Great advice.
my other tip is Control F and progress over profits. So,
Amazing. Thank you, guys. Thank you. Okay. Well, thank you to each of you for what you're doing on behalf of your clients and specifically your communities. People get to buy homes because of the work that you do in Columbia after the 9 to 5. You give people memories on Christmas, and you get to be the behind the scenes. So thank you to each of you, truly. Thank you all. There you go.
Let's go, Angela.
Amazing. All right. If you have any questions for us, please feel free to meet one of us, any of us, out in the hallways, but enjoy the rest, and thank you to each of you again.